The U.S. economy faces increasing threats from trade policy turmoil and worsening fiscal conditions, with 60% of chief financial officers anticipating a recession by late 2025 and another 15% predicting one by 2026, a CNBC survey shows. Trade disruptions have emerged as businesses' primary concern, cited by 30% of CFOs as their top external risk, surpassing inflation and weak consumer demand, with many describing current policies as chaotic and disruptive to long-term planning. Anti-economic warnings have intensified, with Moody's reaffirming its negative outlook on U.S. creditworthiness, citing ballooning budget deficits and unsustainable debt levels that threaten long-term sustainability. And moving on to other headlines across the globe. The Bank of Canada noted diminishing downward pressure on inflation after it cut rates to 2.75% on March 12. Policymakers said the rate cut was aimed at countering the impacts from U.S. tariffs, warning the economy may weaken as the tariffs take effect. The U.S. Federal Aviation Administration will hire 2,000 new air traffic controllers this year while maintaining strict oversight of Boeing. The agency will also form a new safety panel to monitor potential hazards from helicopter and airplane interactions. Tesla will begin sales in Saudi Arabia next month as CEO Elon Musk mends ties with the Gulf state after the 2019 fallout over a failed privatization attempt. The move expands Tesla's presence in the Middle East, where EVs only make up 1% of Saudi's car sales. China's industrial sector is showing signs of steady recovery, with major firms reporting improved revenue and narrowing profit declines in the first 2 months. Data from the National Bureau of Statistics shows revenues at China's major industrial firms rose 2.8% year-on-year to over 20 trillion yuan, or nearly $2.8 trillion in the first 2 months this year. Industrial profits dipped 0.3%, a significant improvement from last year's drop. The manufacturing sector led a turnaround, with equipment and raw material manufacturers swinging to profit growth. Meanwhile, China's equipment renewal and consumer trading policies are delivering strong results, with key manufacturing sectors reporting double-digit profit growth. Auto manufacturing profits rose 11.7% year-on-year, fueled by vehicle trading subsidies. The electronics and home appliances sector saw even sharper gains, led by smart device manufacturers reporting a 125% year-on-year profit surge.